All right. Hello, everybody. This is Jim, the option professor. Sorry for being a moment or two late here, but I hope I'll have you some good information that'll be worth your little wait here. Okay. Just quick background on myself. I'm a graduate of Boston College. I've been in the options business for decades and decades, and then decades some more. So this has been my work for pretty much my entire career. So I've been to the Options Institute in Chicago for advanced training, and I have traded thousands of contracts and millions of dollars in the options area. So I'm going to share with you today my ideas, my opinions. And of course, I'm not giving any advice to anyone because that's not what we do. We just share our ideas and our opinions. So we're going to start out here with the S&P 500 because I think something very large is about to be happening here between tomorrow and Friday. And one of the reasons is that we have got the CPI coming out tomorrow. And if it is a substantial number up or down, it's going to have a significant effect on the markets. The first thing it'll have effect on is the 10-year Treasury, which Treasury Secretary Bessent would like to see drop. According to him, Trump and they both would like the 10-year to drop in yield. But that'll be difficult to do if it comes in hot on top of the jobs report, which showed wages are up 0.5%, which means people have got money in their pockets. They're all hired because it's 4% unemployment. And spending both their own money and other people's money is rampant, as you can see from a firm. And maybe today with Upstart, these guys loan money to, shall we say, the less than prime borrowers. And so you go to a restaurant, you see it all packed. So, it'd be a little bit unusual to see the CPI go down too much, but oil did drop in the last month or so from $81 a barrel down to 71. I don't know if that's affected gas prices. Maybe they get some relief on that. But anyway, if it comes in hot, I think that'll be a real problem for the markets. The other thing, which sounds silly, but I'll look at anything that has any kind of merit, is tomorrow's going to be a full moon. And obviously I don't trade off full moons, but I factor it in. And why would I do that? Well, you see this low right here on the S&P? That's January 13th. And you know what January 13th was? You got it, the last full moon. So if it comes against my indicators and there's that full moon thing, sometimes I think there's some merit to it. How about the last time before that? Well, December 15th, you can see we were up in this neighborhood. And obviously, after that full moon, there was quite a change in mood. So again, are we going to see a big drop tomorrow and it takes out 60-20? Or on the S&P cash 6,000 5980. If it takes out 5980 and 6,000, the trap door can take you all the way down here to the mid 5850s. So it could be a very exciting couple of days between now and the end of the week. I would definitely be ready and flexible to go where it pushes you, because I think this is called a little bit of a traffic jam up here. And I don't think the traffic jam is going to last. And if you look at the 1 month graph, you'll see it's a traffic jam here, and I don't think it's going to last. So that's where I'm getting. I'm not looking at I'll put the E-mini up because most of you guys trade E-mini. Let's put that up so you guys have something that you can relate to. So what are the numbers on the E-mini? Oh, that's a traffic jam. And like I say, it looks like it wants to bust to the upside. So if you start seeing it get above 6,100 on the S&P, you're probably going to fly, right? But if it doesn't and it takes out 60-40 here, well, this is on the monthly, 60-40, more like on the 1 year. If it takes out that blue line of 60-20, because the 60-20 comes in both around the green and the blue, 60-20, 60-30, something like that. Starts taking that out, then you got a good shot of coming down here again, 59.50. And like I say, if it ever gets underneath there, the trapdoor is pretty expansive. So if you want to be bullish, you want it to hold this 60-20 level on the S&P, 60-30, 60-20, 60-40. Let's give it a range, huh? And you want it to hold that, and you definitely want it to be sustaining above 60-73, which it's doing right now. That's why I say if the thing comes in light on CPI and you are going to get a backing off of the yield, let's take a look at the yield here. This is your 10-year note. And the 10-year note went way down to 440, but right back up in their face here at 453. Now you can see it's back above the red line, but the red line's pointing down. And again, green is coming down. So if it gets above 460, I think that that is going to mean that the number came in hot and the rates are going higher and the yields are going higher, which I think would be negative for the stock. So then it might take out that 60-20. And if it takes out that 60-20 and keeps going, you got a pretty good correction on your hands. If it comes in nice, you're going to see the possibility, best case, of going down to this neighborhood here, which is what, 420, 430 ballpark. So you could get 20 or 30 basis points is cut off of this thing. If you look at the 5-year graph on it, it's the same story. Same neighborhood, right? And so if we get a good number on it, there's a little bit of a trap door there. So yields could drop if that happens and we get above 6,100. Now you got something to play. Right now, you're kind of guessing, but with a lean to the upside. The other thing is the VIX. Oh, by the way, on long-term basis, though, you got to be careful getting too excited about lower rates because that blue line is not a joke. It came down here right after it did 50-point cut. Everybody's thinking rates are going to drop. Totally a time to short bonds because rates have gone nothing but up since that time. That's September. So that's a pretty good rebound back up to the highs. Now, again, where's your red and green come in? Again, that 420, 430 neighborhood. So if they get a great number and it goes down to 420, 430, again, be careful about getting too bullish on bonds because all it's doing is reverting to the mean. If you can stay under 420 and 4%, then a trend to lower rates down here at 250 or 3 could happen. Okay. So there is a possibility of a fantastic big bond market rally. But I think if that happens, it would probably have something to do with weak growth or something about something weak. And that might not be good for earnings or margins. And with the prices of the stock at this level, contraction in margins or PE ratios is certainly not going to be bullish. But right now, you play the tape that you have. And the tape we have right now is a lean to the upside in stocks and a basic sideways consolidation in the treasury. That's basically the card you're getting. Now, the dollar, that had a big run, and that's at a critical zone. That's why I say between the CPI report and the full moon, I'm expecting some fireworks here. If you can't get above, let me show you, 105, 108.50, it could very much have a correction. You see there? So I'm saying this is a good place to be hitting it. And if it gets above 108.50, obviously getting out of it, because if it breaks under 107, the trap door goes pretty far down. And if our yields ever drop and our yield advantage goes out the window and Europe starts going great because money's easy over there and Trump is happy because, everyone's making money and all that stuff, the dollar could back off in a very substantial way. So it's a critical zone for the dollar. Back above 108.50, who knows where it's going on the upside. Breaks under 107, you got a pretty good trap door looking at you in the face. Let's look at the price of gold. I've been very good on gold because I'm following the trends. Now, again, China just allowed their insurance company to buy gold. I mean, rather than buying treasuries, they're buying gold. Why? Because they can see from what happened to Russia that we can lock up their stuff. And they're not interested in getting their stuff locked up. So they're looking for alternatives to the dollar. And maybe they'll even try to put that yuan against the gold, but that seems like a long shot. At any rate, you see why I was bullish 2,600, 2,650. You see that's the neighborhood to load the wagon. Up here, it's extended. So obviously it's still strong, but right now, maybe it's too high to buy, too strong to sell. But, like I say, if you get a reversion at all to the mean, like you got down here, that's your opportunity to get on the boat at a reasonable ticket price. But certainly it's a strong looking deal, but it is extended. And like I say, it's extended on every chart, every chart. So if it did pull back, a couple $100 coming off the gold price wouldn't shock anybody if it had a correction. Let's take a look at your Bitcoin. Some of you guys out there are still playing that Bitcoin. That one I've been pretty good on too, and I'll show you why. Okay, on Bitcoin, looking at the 5-year graph, this was the neighborhood I was telling people. This is where you'd want to do the micro strategy. This is where you'd want to buy your Bitcoins, right in here in this area here, 65 grand. Boom, what a rally. Double top, now we're coming down. My feeling right now, very simple. If it can get back above 100, you're back in the business. If it gets under 90, we could go down and fill this gap and the support zone around 70 grand, 75 grand, something like that. 80, 70, 80, 70, something like that. Now, what was the tip that made me think that could happen? The tip was on MicroStrategy, I could see it could not get above 360. And so I thought if MicroStrategy broke to the downside, this thing might as well. So as you can see, MicroStrategy could not get above 360, and it has a chance of going down and filling their own gap down here. And if it hit the purple line, purple comes in around 272. So 272 might be an interesting place to revisit MicroStrategy. If you're a believer that the post-halving is going to lead to a big rally towards 150 grand, because the story goes that the Bitcoin can triple after halving. It already doubled from 50 grand to 100 grand. So going to 150 is certainly not off the table if it got back on the bicycle. But it's not going anywhere until it gets above on this thing, until it gets above 350. So you know exactly where you can, just bide time, because you're not missing out on anything until it gets above 350. And on the international markets, people are shocked that Germany's up 10% for the month of January, because all they hear is bad news. VW, BMW, Mercedes, and that. So they're wondering, well, how the heck did Europe go up like that? Well, because they're easing money and credit, which means the money and credit's getting very cheap. And they are what? They are Germany might be doing their first stimulus program in God knows how long. So, they do have consumers with some money. They do have lower interest rates. They do have some stimulus from some of these countries. Some of the political situations in France and Germany will be settling down. And so that's why it ran up. Now, obviously, on my report, I said down here that it had a very good shot of a big rally, because this was all about nervous about Trump. Once Trump came out and started pulling tariffs off as fast as he put them on, that made people think that he's not going to be a hardball player. And that made these people go, no way, I want to be short down here. So when everybody buys, that's when the market maker raises the offer, and that's what they've done. So now at the easy money, obviously the bounce has been made. We're going to have to see how things unfold, because it easily could revert back to the mean. But this was a great call down here for a short covering rally, and that's exactly what happened. One other thing that people are pretty interested in right now is Alibaba, because that is a stock that seems to have some great legs. I thought it was a great bargain at 85. So the $100 calls were going for like $200, and now obviously they're a lot more. So down here, if you can see my gold line and you think it's a good deal, and you go a little bit out of the money here because you think it might go back up and retest here, these options up here are dirt cheap, and they're not dirt cheap any longer. So sometimes I will look for things like this and go a little bit out of the money, knowing fully well if this low, which is a very important low against gold, turns into a rally back up, you're going to have a very nice expanding call option. And if you're wrong, the only thing you're going to lose is the premium. So sometimes I see things like this, and I don't think it's a bad deal. In fact, I did see it recently, and I got a nice bounce on NVIDIA. Now, people said, oh, NVIDIA's 130. Oh, it's cheap. Oh, when are you going to buy it? I go, listen, you call me when it hits 115, and then I'll be more than happy to buy it. And you understand why now? It came right down to my gold line. That's where I'll load the wagon, right there. Now, why is it having trouble here? Right there. So can it get through this neighborhood? We're going to find out. 135. If it gets through 135 and they have good earnings on the 26th, this thing could fly. If for whatever reason the stock market's going to have a big drop because the CPI print comes in very high and yields go back above 460, and we take out 60-20 on the S&P, I would think that maybe this thing might have trouble. Certainly, you know exactly the neighborhood right here where it's going to make a decision. The decision is going to be breakout to the upside, or it's going to be resistance holds. Now, the fact that purple's rising is not a bad thing. but these things are all meeting at 135. So there's going to be some real fireworks in NVIDIA between now and the end of the month, I believe. So watch that very closely. You missed the boat down here, but if this thing is breaking above 135 on its way to 160, that's still a decent thing to look at. Okay. But the proof's in the pudding. And right now it's got some resistance right smack dab in front of it. We'll have to see how it goes. If you have any stocks you want me to look at for you, please put it in the chat box. Buy point for convertible MO dividend. Don't know what that means. If E-mini is down 825, would that be a buy? E-mini at 820. Some of these I'm not understanding. So if you have symbols, I see one symbol. Oh, NEM. Okay, let's look at that because that's something I've been bullish on. And it is panning out. So let's take a look at that. Now, again, he's putting, tariffs on these metals, right? So, it could be a good situation. But you see, that's where, I loved it down here at 39. And you got to be concerned right here because you're running right into purple. So if this thing can close above 46 bucks, okay, and stay above there, it's got a lot of open area, doesn't it? So it's, again, it reminds me exactly of NVIDIA. NVIDIA 135. It gets above 135, 140. It's on its way. Bye-bye. If it can't, and you start buying here, you're going to be buying right at the peak. Same thing here. If this thing can get through this number here, got a lot of opportunity. You got a big gap there at 59. Maybe it's headed towards there. So that means a lot of opportunity here. So watch this thing closely. But again, the time to really load the wagon was down here at 39, but at 46, like NVIDIA, if it gets through here, could really continue up. If it can't, it's back in the soup. What else you got for me here? SLB, yes, Lumberjay. Drill, baby, drill, right? Well, if it's drill, baby, drill, you're going to need drill bits. You know what these guys do? Drill bits. So let's see what it looks like. All right. Yeah. Well, this is a classic case of it looks like it's trying to break to the upside. Again, you held the blue, which is beautiful. Green's rising. Red's getting there, and it's getting above purple. So could this thing pop up to 45 on a spike? It could do that. So keep an eye on it. Looks pretty good. Looks pretty good. And that consolidation is a prelude to a big rally sometimes. Want me to show you how I feel about that? This was something on my report last week. McDonald's. Where'd you get McDonald's, Jim? Where I got it from is right here. You see this? This is called a consolidation and the purple line. Once you get above purple, bye-bye birdie. And they had a good earnings report. So I was looking at options for like 200 bucks at 310 for March. They're now at like 6 or 7. Not too shabby. All right. What else we got for me here? ABBV. Well, ABBV is healthcare, it's drugs, and I think it's been back and forth, back and forth. Let's see what's going on now. Yeah, again, you had a nice, see, when it's like this here, consolidating, and it's got some resistance, if it can get above the resistance, it's going to pop nice. And that's what happened here. So what would I try to do here? If I would like to get on board, I'd like it to at least go down and test right in this neighborhood where they're meeting. Where's the meeting of the minds? 185. So if you came down to 185, that would be interesting. And of course, if you filled in this gap, that might be interesting, but once it gets under purple, it's back in the soup. So this thing is very interesting because if you can stay above 185, I think you got something. But this is not an optimum time the way I like to do things. But I would not be negative on it until it got under 185. Where are you now? Jimmy Joe, CONY. Coin option income strategy. Okay. Well, it doesn't look very good as far as the NAV is concerned, or the whatever it is. It's in the downtrend. Anything on the 5-year to make me feel better? Not really. Any divergence to make me feel better? It's an ugly looking thing, and I'm looking for a sign of beauty. Let's see if there's any signs of beauty here. All right, so where are you here? You go down to the lows, and where were you here? You were at, hang on here, why do I got two of them? Let's get rid of one of them. I'm getting a headache looking at two of them. Okay, so where are you here? You are at, draw the chart. Sorry for the little hold up there, guys. Okay, so where are you here? You're down at 29. Then you're over here and you're at what? 43. That's why you got a nice pop. Now where are you here? 38. Okay. So I would say as long as this momentum RSI can stay somewhat near 40, you could build a case that it could be getting near a low price. And on a 1 month chart, I'd at least want that turning up. But again, this is not my cup of tea. There's no evidence of a turn. Yes, it looks like the selling is drying up a little bit, but again, it's not my cup of tea. I can't. The only thing I could say is wait till these lines start turning up, and then you'd have something to work with. What else do you got here? SCSC. What's that? Southern Cal. Scan source. There you go. All right, there's another one that's fallen off the cliff, fallen off the table like spaghetti. Isn't that what they used to say? It looks like a plate of spaghetti. It fell off the end. Okay, so let's start out with the 20-year graph and see what the big picture is. Big picture is it's coming right into, yes?
Jim, sorry, we're out of time now.
Oh, really? Oh,
Yeah.
I didn't know we were only going 30 or so. All right, guys, listen, just let me just say goodbye. I'm Jim, the option professor. David has